Okay, so this is problem number 2 on exam 2. And it says, prepare the required end of period adjusting entries for each independent case listed below. Now, remember, this is not, this problem is not an example of every possible adjusting entry you can get. This is just kind of covering some of them. Make sure to go back to the problems we did in class on the PowerPoint slides, and you can see those on the videos, and also go back to your homework because those are all possible ones that you could see. So, case 1. The Toma Company began the year with a $3,000 balance in office supplies account. During the year, $8,500 of additional office supplies were purchased. A physical count of office supplies on hand at the end of the year revealed that $8,300 worth of office supplies had been used during the year. No adjusting entry has been made until year end. So remember, whenever you're dealing with the supplies number, you're always looking to find what was used. You always want to know what was used, okay? And so this one, they tell you. They tell you right there. They say the year, a physical count of office supplies on hand at the end of the year revealed $8,300 worth of office supplies had been used during the year. Okay? So $8,300 worth of office supplies had been used during the year. So they gave us the number right there that we need. So we are going to debit supplies expense, $8,300, and we're going to credit supplies, $8,300. Now, if the problem gave you what you started with and what you ended with, you're going to subtract what you ended with from what you started with to get what you used, okay? You started the year with $5,000 in office supplies. You ended with $1,000. So that means you used $4,000, okay? All right, so let's go to number 2. Number 2 says, the Lido Company has a calendar year accounting period. On July 1, the company purchased office equipment for $30,000. It is estimated that the office equipment will depreciate $250 a month. No adjusting entry has been made until the end of the year. So they haven't done any adjusting entries. So you have to do an adjusting entry of $250 a month for the length that they've owned it for the year. So they bought it on July 1. So you have to do it for all of July, all of August, all of September, all of October, all of November, all of December. So it's 6 months. So you would have 250 times 6, which gives you $1,500, okay? So you're going to debit depreciation expense, $1,500, and you're going to credit accumulated depreciation equipment, $1,500. Okay. All right. The next one says, Yeats Realty is in the business of renting several apartment buildings and prepares monthly financial statements. It has determined that 2 tenants in $800 per month apartments and 1 tenant in the $1,000 per month apartment had not paid their December rent as of December 31. So basically what you have to do is you have to bill them. Okay, you've earned this revenue and you haven't recognized it yet, and the customers haven't paid it, so you have to bill them. So what we would do is we have 2 apartments at $800 each and 1 at $1,000. So 2 times 800 is $1,600 plus $1,000 is $2,600. Okay. So for the next one, we're going to see over there on, hold on, I'm just moving over here so you can see it. We've got $800 plus $800 plus $1,000, so a total of $2,600. So we are going to debit accounts receivable, $2,600. And we are going to credit rent revenue, $2,600. Okay. So that's that one. And that's it for that problem. So those are the 3 adjusting entries. Again, go back and look at your homework problems and look at the problems that we looked at in the class, because you might have something that has to do with interest expense. That could also be another one. You could also get where you are earning unearned revenue, or that you are using that prepaid expense. So those are all possible ones for adjusting entries, including the ones we have here.